What's up, guys? Hope everyone's doing well today. Today, I want to go over this article I just posted on Medium about trend trading in crypto and how you guys can use this to your advantage. What better time to learn and get better at your trading and investing skills than in a bear market? So I'm going to be going over a lot of the stuff I covered in this article, as well as going as a little bit more in depth on some of the concepts shown. If you want to read along, feel free. The link will be in the description for my article. And I think that I've gotten a lot of good feedback on it, so hopefully this will bring value to you guys. If it does, be sure to leave a like and a comment down below. I promise, if you are new to trading or new to crypto, this is going to be very, very valuable to you. So please remember to leave a like and a comment down below. It really helps me out. And let's get right into it. So you are going to need a little bit of knowledge about technical analysis to really grasp some of the concepts that I'm talking about. Nothing too crazy, just really support and resistance. Very simple concept if you don't know what it is. Basically, support means it's where a market will bounce and be held up. So right here you can see an example of support. We came into this line here at roughly $295. And we bounced, and that was what was holding the market up. We saw support again here, but a very weak bounce, and then we came right below it. So if you don't know, when support or resistance breaks, this support line broke, this now became resistance, and resistance is just the opposite. It's where a market pushes up into and gets rejected. It's where there's a lot of sellers, and yeah, you can see that pretty clearly right here. That same line where we bounced off of is now rejecting the market, and this is the 2013-2014 crypto bear market that you're looking at, this slow consolidation period. So again, I'm going to be going over this article. First, I want to define what this system is, because it's a very powerful system that you can use to objectively identify trends, and this is going to be a really powerful strategy that you can use whenever you're buying and selling a crypto. So I highly advise you guys pay attention and maybe take some notes. So the definition of my strategy, and by the way, real quick before we start, this is not quote for quote my strategy. I've based a lot of this off of concepts from Crypto Cred and the trading channel, so be sure to check them out for some more in-depth videos from them about all this. So the definition, first we're going to be looking at what a trend really is, and so I would define it as a 1, 2, 3 move. Nothing too crazy here, just a impulse move followed by a pullback and then continuation. So you can see here this little diagram. This is what I would classify as an uptrend. You have the impulse leg up, a pullback, and then continuation. And that continuation can also be in the form of an impulse move. Typically, what I mean by an impulse move is it's the initial move up that potentially sparks a trend, and you can see that very clearly here. This is the end of 2015 here on the Bitcoin chart, when we finally started to show signs that Bitcoin was ready to start going again. And you can see very clearly we had this impulse move up, we pulled back, and look where we pulled back into, that same level that I was showing you guys, where we saw support and then resistance. We saw resistance 4 or 5 times here, and then guess where we pulled back into, that exact same level. And then this is where you start to see the continuation. Trends can be formed inside of trends. So here's the 1, 2 move, and then we start forming an uptrend into this resistance here at $463. And that's where I officially would that's where I would officially declare Bitcoin in an uptrend right here when we broke out there. And you can see very clearly that we moved above it, a very convincing move. This was a very large candle coming above this line of resistance, and that's how you can know for sure that you have a certified a breakout. So That's what we're looking at in terms of an uptrend. Downtrend, the exact same thing. This time the impulse move is down, pullback is up, and then you see continuation downwards. And you can see here this level of support right where this lower low is. That's exactly where we pull back into when we continue a downtrend. This does not happen exactly to a frame. If every market worked like that, it would be very, very easy to trade, and that's not exactly the case. Typically markets will kind of like try and shake out people, so it is possible for it to pull back all the way up into this zone as well, but as long as it does not breach this level of resistance, then you are in a certified downtrend according to my rules. And it's very important to have rules in place, to divine and objectively define what you're going to consider an uptrend and a downtrend. Here's my example of what when people say market structure, this is what they're talking about. You have a higher high, a higher low, you break out here, and then you have another higher high, but until this low is violated, you're in an uptrend. So let's say it came back into this and then bounced off of this red X and continued higher, that would still be in an uptrend according to my rules, and that's not a break in market structure. It's a very popular term, and I often see a lot of questions about that. So just to clear that up. So now we can get into the application of this and why we can see this is so valuable. So if we scroll down here, just by using these rules, you can see how powerful trends are within crypto. I probably should have showed you guys this at the beginning of the video, but if you're still watching, you can start to see how this is all coming together. That just by drawing a couple lines on the chart of support and resistance, you can see just how nicely these charts react to these levels, and how convincing some of these trends are. Obviously, this is done in hindsight, so I don't want you guys to have any unrealistic expectations. Trading is a very hard thing to learn, but if you can combine technical analysis with risk management and have good psychology of understanding how to trade, those are the three pillars really of how to be a good trader. And if you can master technical analysis, this part of it, you're in a very strong step in the right direction. And a lot of people think that it's very hard to learn, when in reality, you don't really have to learn any indicators. This system uses no indicators whatsoever. All you're looking at is support and resistance. That's literally, anyone can learn that. I promise you guys, if you put a little bit of time in, you will start to learn this stuff very, very quickly. So yeah, hopefully you guys are following along. Hopefully this all makes sense so far. And just to show you guys again, this is just by using our system here. I'm gonna go through some of these charts and just show you guys. There's no guarantee that you would have sold the exact top, and that's not the point of this either. You're missing some of the initial uptrend, but just by buying here and waiting for a confirmed uptrend, you can see that you have a much greater certainty that you are going to have a good trade on your hands. A good trade here would have actually been to wait for this breakout and buy this pullback, because this support was or this level of resistance was resistance for over a year and a half. That was a very, very good level to buy it. You had a very high probability of buying here and making money. So why, and I do want to explain as well why this continuation move is part of my rules as well. I actually can pull up a chart to show you guys. So this pullback, sure, you could have made money there. And it really just comes down to what your overall strategy is. You have to know if you have to have a plan. If you're going to just buy and hold, possibly waiting for this confirmed uptrend is a better strategy for you. But if you want to trade, by all means, you can buy that pullback there and look for money there. So there's a lot of different ways you can do it. If you have questions about any of this, feel free to leave it in the comments. But this is why I have a rule in place. that you need to see continuation, because you can see here on altcoins like this, this is CMT BTC, you can see exactly how we have these pumps and it just retraces the entire move. That's not an uptrend according to my rules. Sure, you have a little uptrend here, but that's not a sustainable uptrend like you see here in Bitcoin that, you know, lasts for a year. I don't think you're ever going to see an altcoin that pumps like Bitcoin does and forms an uptrend for this long on its own. I'm saying without Bitcoin being in a bull run. But you can see here just on a smaller time frame that this is a really important rule, because you know, this had the opportunity to become an uptrend if it would have gone something like this instead, where we pump, pull back into this red line, this level of support, what was now support, and then continued higher with, you know, you can see that clear uptrend move. That's how I would have considered this in an uptrend. So it's really important to see that continuation move, to break above that previous level of resistance, which you can see, you know, with that breakout move like I defined. Where is it? Right here. That's really the most important part, and you know, from there you would have just bought and hold, or you could have traded buying some of these dips. But yeah, that's why it's really important to have rules in place for all if you're trading, and you can start to see the power of technical analysis and understanding you know, when to buy and when to sell. So hopefully that's all making sense. That's pretty much everything I wanted to cover in the video. I see a lot of misconceptions that always buying the dip in crypto is a good idea, because over the long term, you know, it's a good investment. But you know, we've seen in the past couple of years that's just not the case. We saw a 85% pullback from 2013, and we're currently in a 82% pullback, even more actually, because I did not mark that top. But you get the point here that buying the dip is really only a good strategy in an uptrend, and then during these downtrends, you know, just wait and see what's going to happen, because there's a good probability that until we start to consolidate, like you can see here, where we're just in a range, or start to form an uptrend, you know, you're putting your money at risk, because these trends tend to play out for very long periods of time. I'm probably beating a dead horse at this point, but yeah, I think you guys get to see the point. This is very applicable to many altcoins. I'll do Tron real quick, so you can see the same exact type of market structure here. We pump, we do a very extended pullback from roughly May until August of 2018, enter that accumulation zone where we have key resistance here up at 420 Satoshis, and we see that again, clean breakout. We enter a parallel channel here for a minute, just a quick consolidation period. We break out higher, and that's when you're knowing that this is for real, and that it's time to start buying the dips. We pull back exactly into the top of this previous wick or candle, or well, wick technically, but we pull back right back into that level and continue higher. So just to show you guys again the power of that support and resistance, that's really all you need, and that's why I wanted to put this article out there. You know, you don't really need any crazy indicators to start learning technical analysis. Just follow these rules and really have a good understanding of risk management and trends, and you know, you're good to make money in crypto and start trading. So do not take that as financial advice. Make sure to do all of your research before you start trading or anything like that. But you know, feel free to tweet me any questions about this. You guys could really see, and I'd highly recommend you guys backtest this for yourself and play out trades in your head and write them down. You know, all that stuff's going to be very powerful if you are an aspiring trader. So hopefully this was valuable to you guys. If it was, again, make sure to leave a like and a comment. And finally, one last question that I'll answer is that for 2019, I personally see Bitcoin just really going into a consolidation period. just like we saw in 2015. I think that a lot of people have unrealistic expectations, that we're going to go to 50,000 this year. I'm not saying that that's impossible, but, the year is still very early. However, we do need to cool off still a bit more and really find an area of value, where people are willing to buy and start accumulating. So in my personal opinion, I'm not saying that this is the bottom either. I'm just saying if we stay in this range for the rest of 2019, or at least a good portion of it, that's probably going to be pretty healthy for us. And then we can start to look for, those uptrends again. And that's what's going to be the driver of the next parabolic move in Bitcoin, if it happens. You could see once this uptrend formed, we really just started to go parabolic. So I'm in no rush personally to watch this happen. If it starts accumulating here, I'll definitely start buying. But once we start an uptrend, it's really just going to be all out, and Bitcoin's going to really start to go. So again, that's why I'm not impatient by any means. So if I was to guess any price action, I would guess that 40 or 4,000 roughly would be the first level of key resistance that we need to get above. It's possible that we do pull back into this level or somewhere around here before seeing the actual bottom. So that's one situation that could occur. We have a midterm rally into either 4,000 or 4,500 or 5,400. I meant into this mini little accumulation zone that occurred, or brief consolidation, and then continue down again, because we are still in a downtrend. But overall, I am not going to be getting quite bullish until we are above 6,000. And you can ask any decent trader with any technical skills that 6,000 is going to be such a strong level of resistance that it's just going to be really, really hard for us to get above that anytime soon. That you can compare that level to our level here at $285, or even $460. Whichever one of those two it ends up being, however the market structure plays out. But this level is going to hold us under for a very long time. But once we get above this, I would consider that's the key level that I'm watching. For the definition of an uptrend, once we get above this, I strongly would consider Bitcoin in an uptrend, and that's when we can really start to look for another parabolic move, where we can Bitcoin just goes crazy. So that's just my guess on what's going to happen, but there's some reasons that that it would make sense for something like that to happen, and all the catalysts are there for this year. So I've definitely been rambling on a little bit too long, I feel like, for this video, but again, hopefully it was valuable to you guys. Hopefully everything I said made sense. Make sure to leave a comment down below if you enjoyed, and I'll see you guys in the next video.